So welcome back, my dear students. This is the third lecture in bookkeeping. This is the third lecture in bookkeeping. And today we are talking about a new aspects, a new things in the bookkeeping. We handled before two kinds of transactions. Like I told you before, we handle two types of transactions. Let us repeat them back quickly. The two types of transactions which we have. The first type where the owner starts the business with $10,000, and we said starting a business means that you took from cash from the capital and you deposited into the cash. So the cash increase, and we said when the cash increase, the cash is an asset. So an asset, when it increase, like here, when it increase, this could be a debit. This is debit. For increasing the assets, this is a debit. So we set from cash into capital, and the amount is $10,000. And I show it to you how we will do it. Just insert a table from here and work it. That was on August 1. Okay. The second transaction was a van is bought for 4,500 cash. We bought it cash. So that means that the cash, which is the assets, decrease. So what will happen if an asset is decreased? The second case here, asset, and decrease, this will be credit. So we'll say from the name of the purchase which you bought, what we bought, that stuff is a van, into the cash with the amount of 4,500. Then small declaration down, a small brief, which is highlighted in yellow, about the reason for the transaction. Why did we do this transaction or this operation? And here we write the date. So here, purchase a van, and we write the date. That is the second. Now, I will just go furthermore to some examples about the journal entries. And we'll go for the first one is like here, but I won't say part, a theoretical part first. This is a theoretical part. We just adjust it. Then okay, guys. So here, the physical form used in double entry bookkeeping to record the financial changes caused by a transaction. Each must have at least one debit and one credit. Wait a minute. At least means there might be in one transaction more than one debit, and there might be in one transaction more than one credit. That's right, no problem. Okay, and the total debits must always equal the total credits. That's what will happen always, that the total debits will equal the total credits. Look at this. Purchase of inventory on credits for 2,000. As long as it's on credit, and he didn't say the name of the one who sold it to you, then it's from inventory into account payable. From inventory to account, because this is a purchase of inventory. The name of the purchase is in inventory. To credit, you will remove the word credit and you will put the word account payable. That is for 2,000. Wait a minute. You know that this is increase in assets because increase in an asset is inventory. One of the inventory is an asset. Increase in it, so it will be debit. So it will be on the left side, like I told you. And the other one is the account payable. Account payable is credit. So increase in liability, that means it's credit. Increase in liability, that means it's credit. Here we go. So here is the transaction. Let's say on Jan 1, just to make our transactions clear and formed well. We'll do now the new transactions in another company. This is another company and another example. So I will do in front of you here, insert, and that's what I want you to make your answer like, 4 columns like, and we'll go one by one in these transactions. So just we'll move this column here And we'll move this column here. And I just want you to forget about the first one. This one is done. We'll go here to the second one, so the students might be not misled or can understand it clearly. That's the way. So here I will say Gen 1. We are moving forward now to know the third type of the transactions, which is on credit purchases. On credit purchases. So like I showed you here just now, what is the example? Let's see the example saying what? On Gen 1, purchase of inventory. Wait a minute. The name of what I purchase is here. Okay, if I say purchase only purchases of 2,000 on credit, then from purchases to account payable. But I said here purchases of inventory. So I must say the name of the inventory, like you see here in front of you, inventory. Here from inventory or inventory, whatever you want to pronounce it, into I didn't pay in cash. I didn't pay in cash, but actually I bought it and I told the seller, hey seller, I don't have money. Then he said, it's okay, we'll take on you some papers. I will take, you will sign for me for this check. You will sign a check for me. I said, okay, I accept. So I took the inventory and I signed a check. I signed a check. So in that case, or I signed a permission note, or I signed any kind of dues settlings. So it was $2,000. And so here I would say to the account payable. One thing more I want you to know, we write account payable, but you might see it in some books like is written only ACC PAY. Don't worry about this. Some books you will find it like this. ACC PAY. That way. So this is the account payable as well. But I prefer that you write it totally completed. I prefer that you write it completed. So here I will just now go to the our own work and just increase it. And we'll make clearly here this one. Just let me adjust it, please. Give me 1 sec. And here it will be like this. And the declaration is purchases on credits. And I told you now, what is the reason did I do this? How much was the we bought was 2,000. So it was for $2,000. Control and C. And I will go for it right now. Here, this is Control and V here, 2,000. Again here, Control and V, 2,000. And I will take this one here and the other one down. Let me remind you what we said before in the previous lecture. We said that the debit is a little bit to the right. The credit is little bit, the debit is slight bit to the left, and the debit is a slight bit to the right. And I show you now how to do it in Word, and you can do it also in Excel. You can do the same thing in Excel, but actually it will be like lines. You can put one column for the debit and the other column for the credit, and it works very well. And by the way, there are programs which are used in Excel to do all the accounts, the journal entries accounts, and do it also very well. And it can shorten the time. And we'll have some one of them probably will in our own curriculum here. Okay. So now we know when I buy on credits, what I will do. What I will do when I buy on credits. This is the accounts, the inventory or the inventory into the accounts payable. And we will say a small declaration here, purchases on credit. The reason why, because the inventory is an assets. And you know from the start itself, we said increase in assets are debits. And account payable is increase in the liabilities. So this is credits. So it's why I did by that way. Okay, for you now to practice by your hand, I will give you another one. You will do it, please, for me. Control and V. Let's say like this. This one you will do. This is exercise for you on Jan 5. On Jan 5, purchase. Let us say, as example, purchase. I will leave it inventory for credit of 3,000. I don't want to change. Actually, I just want to only $30,000. I just want only the thing to change the numbers because I want you to train yourself on one by one. We will go here one by one. Very slow down, no rush. But the most important thing is to understand what you are working on. So please, guys, do this transaction for me here now. Could you guys do it? I will give you about 5 minutes, then we will work on it together. Thank you. So we are back, my dears, and we'll make the same exactly like what we did before. So here we go. First of all, I will insert a table and 4x4 table, not 4x4 the cards, but 4x4, and it's a number because I will do some transactions also here. So on Jan 5, purchase of inventory. So I will write here Jan 5. Here I will take Control and C and take Jan 5, Control and V. Then purchase inventory, then the word inventory again, Control and C. All you do just is take in some words and put in it, inventory. Then here we'll put it like, sorry about that. Inventory into cash into, actually this is credit. So notes payable or account payable. Account payable. We send it, which switch it into notes payable when we sign the papers. We shift it into okay. So here now this is account payable. Let me write it down small in handwritten so that it won't be large like this. We need it only to be 14 or 16. That's fine. Then here the amount is for 30,000. So here it is. Control and C. This is 30,000, and here 30,000 again. Control and V. And all I will do just now is adjust everything to be on the same handwritten, like 16. Here we go on 16. And here we go. So here it is, inventory, and to the account payable. Then the descriptions, purchases, or our purchases on credits, on credit, purchases on credit. And that will be the declaration of your own transaction in that day. So that's it for the first transaction of today and for the first work of today. And the reason, like I told you before, look at this here, because the inventory increase, and the inventory is an asset. So it's an asset increase. When an asset increase, this is debit. Debit means we put it here on the left-hand side because it's debit at increase. Increase in an asset because inventory is an asset. Increase means it's debit, so it will be to the left-hand side. And account payable here increased as well. Account payable that increased in the liabilities, and increase in the liabilities means credit. Increase in the liabilities means credit. So that is the first transaction for today. We talked today about three things: about starting the business from cash to capital, from cash to capital, and the declaration is starting the business. And if we bought anything for cash, any equipment, we say the name of the equipment into cash. That's if we bought it cash. But if we bought it on credit, to the account payable. Then today we learn also, even for the assets, any other assets, like as inventory, as example, from inventory into the account payable, if I paid in on credit, if I paid on credit, so it will be account payable. Shall see you in the next video. Thank you so much. Stay safe, everyone. And we will go for the transactions. I prefer like to go one by one like this for the students to comprehend each transaction. This will be for me more than enough. We have a spare of time so we can take them, but I don't like to give all of them in one lecture or something like this, except when we are reviewing or doing overall example. For the moment, from me to you, all love and respect. Take care of yourself. Have a very wonderful day. See you in the next lecture. Thank you.